But
In the
obviously
intro, yeah.
ETFs seem to be for the non-investors because they are tend to be safe and sort of a cluster of different stocks and securities basically. So people they were kind of introduced for people to spread their risk amongst different areas. So obviously you've got the S&P 500 ETF, which is obviously incredibly popular because of how well it performs each year, and it's just steady and safe, and it's just spread across multiple companies. But yeah, that's to be honest how I see ETFs for non-investors, pensions. It's very much safe investing rather than you wouldn't ever swing trade or think of it short term.
Yeah, well, with obviously index funds and ETFs, the average yearly return is give or take 10-15% depending on what fund. So it's generally considered the ideal core portfolio holding for retirement accounts.
Yeah,
But obviously, what we've seen, if you invested in the 2020 lows, let's say the S&P 500, which you just spoke about, you would have had almost 100% back on your investment, which is obviously a lot more than the bank would have ever given you. And obviously, the legendary Warren Buffett continuously emphasizes that we should all be in them. But
yeah,
um, yeah, I would definitely agree. I think it's for people that maybe haven't got the time or aren't in the trading world. This is a perfect retirement trade.
yeah,
And then obviously you've got so many. You've got obviously the S&P 500, which follows the 500 largest stocks, to the Russell 2000, that tracks the 200 small cap stocks. Obviously for us in the UK, it's the FTSE 500. But they're all categorized into usually a section, whether that's on the cap or the industry. So um, you could say the S&P 500, yeah, would be the favorite.
yeah,
Mm. There's also new ones that I'm seeing. I don't, well, they're probably not new per se, but their charts do not go back very far. But they are pretty popular. I see it was FTSE All World. They've
Yeah,
basically just like categorized 3,000 shares from the whole world, um, and then just put them all into one simple ETF. I feel like even now with diversified funds, like they're doing some stocks, some bonds, some asset classes like real estate. You can get that all in one ETF. I feel like, yeah, as you said, for retirement and stuff, that's obviously like super easy. You could just like, I don't know, retire with, throw your money in there, and it's going to get you a better return than a bank. But
yeah,
is it necessarily investing? That's, I don't know.
for me, I think you should have your money working for you. In the
Yeah.
bank, it doesn't do anything. And you do see a lot of the cases when people come to retirement. Usually, people might not even have enough for retirement. And since obviously these index funds have started, they've only gone up. Yes, you do have things that just happen like COVID that does drop it, but you will see an incline, a continuous incline. Um,
Mm.
Obviously, there's not a huge amount with the index funds and ETFs, in difference, but one you can trade at the end or at the start, the other you can trade throughout the day like a normal stock, essentially.
yeah. To give everyone the definition, obviously, an ETF is an exchange traded fund. And sort of, yeah, by definition, it's very much what we've been talking about. It's just a collection of shares, securities, and different things, basically all lumped together in one tradable item, essentially. So, yeah, like we said, it just you can get them for so many different things now. Obviously, they're pretty popular with a lot of. If you went to well, sort of UK speaking, Hargreaves, Lansdowne, Coutts, sort of all the a lot of investment banks and pension advice people, they're all very very popular just because then even if one goes, then they've spread their risk. So you'll find we've got clients which they have huge portfolios and millions of pounds in them, but they either go for ETFs and funds, or they'll go for very very safe stocks. So you're talking like yeah, like blue chip stocks basically.
Yeah.
because that's the way they like to operate, because blue chip stocks are low risk, ETFs are low risk,
Yeah.
because yeah, you're just spreading risk. That's sort of the idea behind why they came in.
Yeah, I guess their approach to risk is different though. When you're talking about high net worth value, high net worth value accounts or whatever it is, it seems like those people already have the money, so they're kind of like, man, I don't really need to make a 1 or 2 or 3x return. I just want to make my 10 or
Yeah,
15% compound every year, and that's gonna more than sustain me.
yeah, yeah.
And yeah,
That's what people like to do. They like to have that sort of, if they put in, I know, 1 million, 3 million, or whatever, but then they make 40 grand for that year or 90 grand for that year. They just live off the amount they've generated.
hmm.
Obviously, COVID took a hit for loads of them, and hopefully they didn't get scared. But yeah, a lot of people are waiting for that all to rebound, because even COVID hit the S&P 500 ridiculously hard.
Yeah, as well as with index funds, I think why they're such a favorite thing to trade with is obviously they do have fees, but they're generally much lower. Many index funds offer, I think it's 0.2%, whereas if you go to like active funds, they're around 1%. But yeah, I mean, my question to you, obviously, if you had to look at a sector now, with index funds or ETFs, me personally, I'd be looking possibly in the space sector or maybe the 3D printing sector. Um, I know personally I haven't got, I'm not in any index funds, or the Wealth Project isn't, but you guys aren't personally in there, or
I'm in an emerging markets ETF and S&P 500.
yeah. If you were to invest now, Sam, into let's say an index fund, which one would you go for?
I'd put it, if I was boring, I'd put it in the S&P 500 like Jordan.
Yeah,
Um,
Hey, hey.
but if I wanted to be a little bit more risky and sort of forward thinking, then I'd put it in the ARK Invest Space ETF, because I think that's full of stocks which are just up and coming.
I mean, I don't think
I
you.
don't think they've done any great research into it yet. They've gone very safe with the stocks they've chosen,
Yeah, I mean, when
but
they released
ARK have
that
just got an
space sector,
incredible track history.
it was a little bit disappointing when they released that space sector. 'Cause
Yeah,
I was waiting for space stocks, and it was a little bit diverse in what they released.
yeah,
But
that's
yeah, I
it.
don't think there's such a
Kind of feel a little bit conned.
yeah. But obviously, with market conditions, I don't think they're such a bad idea with the volatility currently.
Yeah,
Yeah, I see it more as a hedge. So
Yeah,
what I have in there is kind of just stable. You do actually get dividend income from it as well. Um, I think just from my current investment, I'm up 10% on my S&P 500 investment, and that's just, I mean, I was just putting a little bit just when I get paid, and
yeah,
that's just like a tiny purchase every month,
yeah,
and it's up 10%. So it's like that kind of attests to the ease of use for these kinds of funds.
yeah,
Would I put all of my investment money into it? No, but I think it's a very useful tool if you
yeah,
just need somewhere to put your money. Maybe not the S&P 500 right now that it's trading at near dot-com bubble uh,
yeah,
price to earnings ratios, but other things like emerging markets, bonds. I don't know. There's so many places you can put it in terms of ETFs, even gold. I don't know why you'd do that, but you could.
yeah,
um, yeah, just feel like there's infinite number of possibilities that are better than 0.02%
yeah,
per year.
yeah. That's it. It's really, even if you invested everything, your life savings, obviously, like Warren Buffett said, it's still a pretty safe bet. So even if you went into investing, that's where you should put your money.
Hmm. It's a good like gateway drug to day trading. No,
Yeah, yeah,
no,
that
don't do
seems to
that.
be what it is.
Yeah.
Um, yeah, and then obviously on the flip side of that, you've got mutual funds. Obviously, mutual funds are unlike ETFs, where ETFs change during the day and things like that, mutual funds, sorry, are just bought and sold at the end of the day, based on that day's prices essentially. But you see funds a bit, but I think most people prefer ETFs over mutual funds.
Definitely, yeah. I think that's down to the fees and everything else.
Yeah,
But yeah.
I think that's the seems to be the most popular way. I think it's sort of shifted away from funds. Obviously, you have Vanguard funds, which obviously they're a huge provider, and you still see them in a lot of pensions and portfolios.
Yeah, Vanguard
But
is huge.
yeah, but you see a lot more ETFs now than you used to. I think that's mainly down to the success of the S&P 500 ETF. Because even people that aren't interested in stocks are now going, well, is my money better placed elsewhere? Previously, it was just you get your pension, your employer contributes into your pension. Often that would just be like historically that used to just be sat there, and now it's all obviously traded by your pension provider, and things like that. So
Yeah,
it's the best way to make your money work for you, really.
Yeah, and the safest option as well, rather than the individual stocks and relying on just one stock.
yeah. No, I really think like as an overall like portfolio thing, everyone should be in some ETF or should have some exposure to like an index fund of some kind.
Yeah,
Just reduces a bit of volatility and keeps the stress off a little bit. But
yeah,
yeah,
You
I've
don't have to look at
followed
it every single day. Yeah,
I've
yeah,
followed like the Bogle heads, is that what it's called? Bogle head investing guide. They have like a wiki, and this was ages ago, but I looked it up, and there's this whole website full of resources and like a huge list of ETFs to invest in, and they basically their principle is like to just invest in a lazy way, to just
yeah,
throw your money into these funds and never look at it again, and one day you'll be rich.
yeah,
It's just another way to do it, and I think a lot of investors struggle to outperform the S&P 500 in general.
yeah,
So
yeah,
I think even Warren Buffett said he didn't. So even over his entire career, trying to make this play and that play, and get it perfect every time, if he would have just put all of his money in the S&P 500, he would have made more.
yeah,
So,
well, he's made enough, I think.
but I think he's made
Yeah,
enough.
yeah,
Yeah, maybe
yeah,
the average person wouldn't have made that much money from the S&P 500. Let's be clear about that.
yeah,
But yeah,
yeah. I think that about sums it up, doesn't it?
yeah.
yeah,
For me personally,
Perfect.
I will not be investing in the S&P 500 and so on. Not quite yet,
I wouldn't
but
do it now anyway.
no, no, maybe in about 5 years' time, I might drop a little bit in there.
Yeah, yeah, it's definitely worth doing.
Give it £5.
Yeah, might as well.
50 quid rich in my retirement account.
Yeah,
Hey,
Yeah.
that's
you
it. Well,
compare it.
thank you all for watching the Wealth Project, and we'll see you again soon.